Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. We're here with Mike Carnevale. I used to can't tell the players without a scorecard.
Delirious from the past month.
It's been. Oh, Mike is so happy. And I'm Richard Morco. This is Conversations With, and Mike is going to tell us where the economy is going. And it was not a bad month, was it?
No. November.
We're in a time warp here.
November. I still think it's 2020. It is 2023. So November.
And you still have a few more weeks.
Yeah. So November was up almost 9% for the Dow. That was almost 3,000 points for the month of November.
That was today it wasn't that great, but
no.
Yeah, that's a good run.
We're back to 36,000 on the Dow, and if you recall, the all-time high was 36,800. So November was the best month in over a year, and it broke a 3-month losing streak. And it also set the high for 2023. Year to date, still not bad, right? The Dow's up 4%. But the other indexes are doing better. The S&P, which is probably where most people are in, that's up 19% this year.
Well, I don't think anybody has an Dow index fund.
Right. Well, they exist, but you're right. Not many people own those.
If you're out there and you're putting your retirement, it's probably in the Dow, or maybe a wider index.
Yeah. S&P and the NASDAQ, which is heavily technology, is up 36%. Interest rates fell. 30-year bond, which was over 5% a month ago, is now under 4.5%. That's a good sign.
Is there any thoughts as to cause and effect there?
Well, I think, the Fed has talked about we're getting close to the end of rate hikes. But also, we've seen some other stuff we'll talk about, oil prices. The rate of inflation is backing down a bit, so I think that is all playing into the fact that maybe they won't need to raise rates, and the Fed won't raise rates anymore, and that gets a lot of people excited about the stock market, and it's also good for the value of bonds.
Quite so. I'm going to throw you a curve.
Okay.
Now, there's the Dow, 35, 951. And sort of like I might become an astrologer. No, that's ridiculous. But Bitcoin has really had a spike.
It has.
And it seems like they almost did that as a dance, the Dow and Bitcoin. They seem to have gone up.
Yeah, I mean.
Any cause and effect there, do you think?
I don't think so, but the fact that Bitcoin has gone up, I think, is there's been talk that the SEC may allow a Bitcoin ETF.
Yeah, that I've heard. But that was before this kind of run.
It was.
So
it was.
It just maybe they're backing off. You think that's?
No, that they're moving forward with it. And that would be, obviously, you know, sort of legitimizes the Bitcoin more than maybe it already is, and might get it more widely accepted, and eventually it will get regulated, and that would be good.
How Bitcoin to be regulated is not as easy as it looks.
No.
Because you know, there are people out there in some of the exchanges, like Coinbase and stuff like that, but there are a lot of people who keep the whole blockchain to themselves and can't really be audited. So the Bitcoin ETF, and also there's a limit in all the happenings and everything,
Right.
to how much it will ever go. It won't go, what, 21 million or something like that.
Yeah, yeah.
So that, I think well, I'm guessing, absolute guess, that nobody knows how to do this.
No, no. And, you know, the thing that could really hurt them would be obviously if the Federal Reserve, other central banks came out with their own digital.
Well, because the people I have read talking about Bitcoin have said it's not going to ever be something you spend. I mean, remember when the first came out and somebody bought a pizza with the Bitcoin,
Right.
and if I hadn't bought the pizza, I kept that Bitcoin
Yeah.
coin, it would be $30,000. That was an expensive pizza.
Yeah.
Yeah. So
Yeah.
it's considered by people I've read that it's going to be a store of value and never something to spend. So would a CB, you know, central bank digital coin, CBDC, would that affect it at all? Because that would just be the same inflationary pressures that the currency, that the money supply has now.
Yeah, I mean, I'm sure it would take some, I don't want to say business, but some demand away from Bitcoin for people who, you know, don't like the unregulated nature of it. I mean, this
They're
past
not
week.
in Bitcoin anyway, though.
Right, right. But I mean, it would shut off that market probably permanently from people even attempting to go into it, even though they, you know, over this past week, Jamie Dimon of J.P. Morgan came out against Bitcoin again, and, you know,
Well, of course they would come out.
yeah, the Charlie Munger, who just passed away, he was a big anti-Bitcoin person, so it'd be interesting to see.
Oh,
how it-
his buddy called it Rat Poison Square.
Yeah, yes, yeah. So who knows how it's all going to end?
Well, that's why we were asking you, a local monthly god.
But I guess I'd be reluctant because it's not a regulated. You know, it always amazed me how somebody would run to Bitcoin, but wouldn't wouldn't purchase Apple stock or Microsoft stock. You know, one's totally unregulated.
How many of those people have you actually met?
You know, probably a handful.
Handful.
Yeah. Who? I'm getting out of my IRA. I'm going to put it into Bitcoin.
You have had.
I have had a couple people do that.
Okay. Yeah,
And you know, not recently, but I mean, you know, when the whole Tom Brady.
he was
touting
with that. He was with
that.
Sam.
Yes.
Anybody who bought anything,
Right.
that had a bad odor from the beginning.
Yeah.
That was an accident. That was the crash that you could see
You're right.
a long way.
Right.
And he suckered a lot of people.
Yeah. Oh yeah. Right at the high. Right at the high. So I mean, it remains to be seen how that's all going to play out. Myself, I would rather I'd take my chances with Microsoft or Apple over Bitcoin personally, but that's just me.
How about today?
Same thing.
You go into
Yeah.
Apple today.
Yeah.
Okay. Well, that might be at a top at Bitcoin, so that probably would, if Bitcoin were at a top, that might not be a bad idea. But Microsoft and Apple are kind of riding high now too.
They are, but they've both, been able to sort of reinvent themselves along the way.
Yeah.
I mean, they were both companies that many people said time had passed, and they've been able to, unlike some companies like Eastman Kodak, for example, which couldn't make the change.
There was this book about Eastman Kodak. They were all the big executives were pushing the buyback of the stock, and that they sailed that ship onto the rocks.
Yep. Yep.
So that was economic crime.
Mm-hmm. Yep. And so, Apple and Microsoft have been able to reinvent themselves.
And Microsoft is betting heavily now on AI.
Yep.
And have you played with ChatGPT?
No, I have not.
It's interesting. It's a little fun to ask it questions. Like there's a book I was reading. Could you summarize the book?
Okay.
Did a good job.
Oh, okay.
So you can get I think 2022 is when it kind of had a cutoff. Mm-hmm. So you might ask any questions after 2022. It might not have an answer.
Okay.
But if you ask it, could you summarize the Bible? Well, it can't do that, but it could summarize some of the chapters of it, and you could start your own church. Well,
okay.
Not really.
No.
All right, let's go to technicals.
Well, I like the technical indicators because I think, at least historically, they can predict short-term action, and it's nice when it all works out, and that's what happened in November. Last month, the short-term sentiment indicators were kind of signaling that, well, maybe the worst of it was over, of the decline after 3 months. Sure enough, it forecasted this big rally in November. So for people who don't follow the technical indicators, they could have missed that big November rally because the market had been down 3 straight months. And of course, it was bringing back all the talk of, the recessions, this, that, and everything else. Yet the technical indicators were saying, hey, this thing may have gone too far in one direction, and the worst may be over. And sure enough, the technical indicators forecasted that.
Raising my hand for
Yes.
a question, sir.
Yeah, go ahead.
How about, what are they saying for the next month?
Okay, now it's the opposite, right? Because you've had a massive rally in November. Almost 9% in the Dow, almost 3,000 Dow points. So as good as those indicators looked a month ago, they are the exact opposite now. So you look at the 200-day moving average, New York Stock Exchange moving average, right? So that's the percentage of stocks that are above their average price over the past year. A month ago, only a quarter of them were. Now almost 2/3 are. That means prices have really gone up. Volatility has really gone down, meaning much less fear in the market. A month ago, that number was 21. Today, less than 20 is considered lower fear. When do people become less afraid? Well, when things are going good. And today, that index is at 13. The short-term price movement support resistance indicator, the oscillator, a month ago, it was at 14. The lowest it can be a 0, right? Today it's 95. The worst possible reading is 100.
So we're all out the door. We all got to head for the exit.
Well, no. So what it says is, okay. People always say, oh, when the market's going down, or I'm getting out, I'll get back in when it's going good. After a big rally like this, people say, oh, things are better now. I think, now it's safe to get in. It might be just at the opposite. This doesn't mean that the market's going to lose the 3,000 points. But if you didn't know what the Dow was doing, and you just looked at these technical indicators, and you say, hey, kind of guess what's going to happen next month, I would guess, geez, probably not that great.
So caution is the Mike Carnevale caution.
Right. Now, countering that caution would be December is the second best month of the year for stocks. So, you know,
What's the best month again?
January
January. And November, which we've had,
was the third best.
is usually the third best.
Third best.
So
Historically strong period now.
we're doing what we're supposed to be doing.
Right.
Okay.
So best case, this thing keeps going until after the first of the year.
Santa's coming, folks.
Well, there is the Santa Claus rally,
Santa Claus.
which is the last 5 trading days of the old year, plus the first 2 trading days of the new year. Historically, that's a very positive period.
Well, and then January, we're hitting the skids.
Well, January, you get another saying, it's the January barometer. Supposedly, as January goes, so goes the year. So
Okay.
we will have to see how things are at the end of January.
We will be here.
But, you know, looking at those indicators, you know, and those are just numbers. There's no emotion put into that. You know, there's none of this, well, I feel, oh, I think. It's a math formula. And more often than not, it provides good guidance, and it hit it really right on, spot on, really, last month.
We look forward to it continuing to tell us what we need to know.
We do.
So, the economy continued strong, annualized at 5.25% for the third quarter. Fed minutes rates need to stay high. Now, you were mentioning a little optimism about lower rates. No cuts in sight,
Yep.
but probably no increases either.
Probably no increases.
Okay.
They meet again the middle of this month, and there's a 98% chance the futures market is predicting that there'll be no change, so nothing's going to happen.
Okay, now the interest rates. Federal Reserve, we've kind of discussed that. Canada and the European Central Bank voted no change.
Correct.
How about the UK? How come they're not in the
They did not meet.
They did not meet. All right, now, Turkey.
Yes.
Now,
Well, it's November, right?
hiked rates by 500 basis points
Yep.
to 40%.
Yeah.
You say, how does a country do that?
Oh, there's 2 countries that are even higher.
Well,
but
I mean, Zimbabwe, well, we
Yeah.
don't even, that's, Argentina, 133%. But Argentina's been down that road before.
Yeah.
Many, many times.
Mm-hmm.
It was once the most prosperous country in the world at the beginning of the 20th century. And then things went, I hate to say went south, because you can't get much further south.
You can't get much further south.
It's Antarctica at that point, and they might get there.
Yep.
But, I mean, how does a country survive that type of thing?
No, it
Now,
can't.
they have a new president
They do.
who's saying, I'm cutting this out. All the games are over.
Yeah.
And you would have thought he was going to take his own, a path independently. He didn't join the BRICS, but he's making nice with the U.S. and the IMF. Well, he says, I'm going to make the dollar the currency.
Yeah.
I see that can kind of work, but kind of not work. But if you're going to make the dollar the currency, you have to at least make nice with the country that makes the dollar.
Right. Right.
I kind of think that that may work if he knows what the supply of dollar, because the Argentina, they do use if they can, they love dollars.
Yep.
Kind of how many dollars might be in circulation already. It might work.
Yeah. Time will tell.
I mean, I'm not going to be opening a Argentine bank dollar account
No.
this week.
No. You're running to Zimbabwe to get the 150.
Oh man, I'm salivating at that.
You know?
The Zimbabwe dollar.
With turkey, I mean, it just kind of comical.
I mean, how do the prices have to be going up?
Yeah,
I mean, I've been watching prices go up in this country over the last couple of years,
Yep.
and it's been a little bit of a shock.
It has
but if
been.
if you're talking a 40%, rate,
Yeah.
it's got to be on every few days. It might not be every hour.
Inflation is 61% there. So, you know.
All right, now let's get to the science.
Well, oil, I want to touch on
Oh,
oil. That
oh,
is really dropping.
I like a stone. I like
Yeah.
it. I like it.
I do too.
But what is it? Why is it? Because we have? Well, we know they're drilling more.
Yeah, they're drilling more.
You could speak to the fact that we have more production now.
Record number of
production.
production.
Record production. But the price is going down. That supply and demand. Yeah, we have more supply and demand. But our people, you would think people would be saying, "I'm driving down to Florida this year."
But they're not.
They're
They're
not.
not.
So that would make it even sink like a stone.
It would. It would. But now to move on to the science.
The science.
And we have some good news here with the Patriots. And don't adjust the volume, sound volume. I did say we have good news with the Patriots.
Well, it's all interpretation.
Yes. So this year they've got double-digit losses. So we want to see, geez, that hasn't happened in a while. What could be the implications of that? It's good. Years following a Patriot double-digit loss season, the Dow has gone up 71% of the time. That's better than the average for all the years of the Dow, which is just 66%. And the average gain the following year is over 5%. So that means all-time highs for the Dow.
Okay, so if the Patriots were on their way to the Super Bowl, and we're going to just crash through, would that mean losses? What would be the average? Not the average, but the average of a Super Bowl year. That the loss?
That I don't know.
I thought you were a scientist.
That I don't know. But I thought it was kind of interesting because we haven't been, it's been what? 10, 15 years before, since the last 10 loss season?
Well, yeah, that's been,
And so I said, there's got to be some correlation. Hopefully it's a positive one.
Does
Sure
the
enough,
word Brady enter anybody's mind?
Yeah, well, it does indeed, And I think that's a good, does that mean you should bet every last dollar? It's as good as any other indicator, I think, because none of this is etched in stone, right?
What are these?
There are no guarantees in anything.
This was not, ladies and gentlemen, a commercial for FanDuel. What's the one that they're doing? DraftKings. This is not a commercial. He's not saying go and call up DraftKings. Not at all.
But I mean,
God.
Of course, we always have to have the disclaimer. There's no correlation between the Patriots and the stock market performance. But it's kind of interesting that it's an indicator like all these other indicators.
Yeah. Which would you trust more?
And it's interesting. Well, I trust this one because it's had a pretty good track record.
There you go.
I mean, it's.
There you go,
again,
ladies
I think.
Gentlemen, we will next month. We'll only be on for 5 minutes. He's only going to He's going to come up with some statistics related to sports. And that'll be it.
It's just. It's an indicator like any other indicator. I think. But it's more interesting than anything else.
It is interesting. It is fun.
Yes.
Now, inflation. Every month, you ladies and gentlemen, you've seen me beat this man silly when he says, inflation is down. wait a minute, it's the rate of increase, it's down. But this month, inflation is down.
It is.
And you should have seen him, he was dancing around before we got him.
It was, well,
The happiness quotient.
consumer prices, no change month over month.
Yeah.
And producer prices actually fell 0.5%. And the rate of increase has really dropped. You know, we remember a couple of years ago, it was at 9-10% rate of
Yeah.
increase. You know, now it's like 4% for consumer prices and under 2% for producer prices.
When I see deflation, I'll do the dance.
Yep.
Okay, that was just me there saying, you pay no attention to the guy in the sweater. All right, leading economic indicators.
For the 19th month in a row, they were negative.
Which is, you would think that would be an inflation.
Really, you would.
I mean,
You would think that would be- I mean,
what do you call it? A recession. Thing.
Right. If you said, again, if you didn't know where the Dow was, and you said, hey, leading economic indicators, which are 10 components of the economy, you know, building starts, jobless claims, purchases of big ticket items, would be negative for 19 straight months. Where do you think the Dow would be? I don't think anybody would guess, oh, it'd be 800 points from an all-time high.
No.
So that's kind of a one that's hard to explain, really. It's getting better. You know, over the last 6 months, the leading economic indicators have been down 3.3%. The prior 6 months, they were down 4.5%. It's a little bit better, but really no real significant improvement. October was negative 0.8. Yeah, it's been bouncing between like negative 0.5 to negative 1 month to month. It's hard to explain. Can't really.
Well, then don't.
And I'm not.
I noticed.
No, and I haven't heard anybody really talk about this. You know, well, why historically after 3 negative months in a row, the odds of a recession increase. We've had 19 months in a row. Why is the economy growing at 5.2% annualized in the third quarter? No one's really talked about that.
Now, what's the growth, though, and where is that growth located?
Well, it's all really, I mean, you know, service type.
Again, which when are we going to manufacture
Right.
Something?
Correct.
Which
yeah.
I think that has to, it is kind of a recession if you think that
yeah.
the great manufacturing jobs are gone.
A gun. Yeah.
So we are in kind of a long-going.
Yeah. Yeah. I mean, it's, you know, I guess things have changed. I mean, it's not cost effective, I guess, for companies to make things here. It's cheaper to make them in Japan or China and ship them here, I guess. You know, I'm not into manufacturing, so I don't know. But obviously, if that wasn't the case, they'd be making them here.
That's going to be an ongoing problem.
Yeah? It is.
All right, jobless claims.
Well, you know, this is, there's the labor markets, 2 or 3 different indicators. Jobless claims is the one that says how many people are losing their job. 218,000 the past week. That's about what it was a year ago. And if you look at historically, what number does it have to be to start hurting the economy? It's 250,000. So jobless claims layoffs are still below the level that could, at least historically could do damage to the economy. That's maybe why the stock market is doing what it's doing, and the economy is growing to the level that it's growing, is because there aren't many people losing jobs.
Well, the long-term unemployment hasn't increased.
It has. Yeah. 1.9 million. A year ago was 1.6 million. So that's started to increase.
And the employment report.
That's the other side of the labor market where we saw how many people losing their jobs, how many people getting jobs. And in October, non-farm payrolls grew 150,000. It was the 34th straight monthly increase. Historically, the economy needs 150,000 to grow. So, we were kind of right at that level for the month of October. But interestingly, November's report, which is going to come out in a few days, may be better because last month the labor force grew by 214,000, meaning there were 214,000 people who
Need a job.
looking for, either entered the labor market or continued to look for jobs. So that's a good sign. Wages up 0.2%.
Doesn't cover inflation.
Almost though, because we've seen over the past year, consumer prices are up 4%, wages are up 4.1%. So the gap is closing. That's a positive. And although unemployment has gone up, it's still under 4%.
Mike is again confident and optimistic.
Well, I think if you looked at a year ago, with all the things that people were afraid of, I don't think anybody would have predicted where we are today.
That's
So from
probably
that
right.
standpoint, it's it's pretty good. Probably, December, it's tough to call December. The indicators are not good, but it's a very strong time of the year. So
Well, in 4 weeks, you'll be back to assess what did
we'll
happen.
be able to see what happened.
Thank you very much. So, Mike Carnevale, Richard Morco, Conversations with, see you in a month, and let's keep our fingers crossed.